So there's some pretty interesting financial information that you shouldn't miss, and that is the reversion that is happening in the stock market, in the South Korean stock market. The Kospi, which is the main index tracking South Korean stock market stocks, has seen a major reversion from being the best performing stock market index in the entire world to now losing about a third of its performance in just the last month. And if you yelled AI, then you're correct. What has happened is a simple case of too much money going into one specific industry, that is AI. And what we're seeing is the minute that semiconductor or chip stocks decline, then the entire market goes down. This has led the Kospi to close at a record low because investors are now questioning AI valuations, whether the supply chain will actually be able to manage to meet all these demands, and all of this amidst the global tensions, especially what is happening in the Middle East. Of course, all of this is being caused by too much greed, and as you can see here, the South Korean regulator is issuing a warning, actually issued a warning late last month, because what they're seeing is that investors are highly over leveraged and using complex financial products like leveraged ETFs and margin calls despite the state of the economy. Top of all of this, you have to remember that all of this capital is rushing into certain industries, specifically AI, and this is creating a situation whereby the stock market index is overweighted on just very few companies, the first of them being Samsung and other semiconductor and AI chip stocks. And what happens is when they go down, the rest of the market goes down. Despite all this, investors are continuing to rush into the market, even though regulators have warned them against using margin debt, which is borrowing money to buy stocks, and this has actually risen to a record high in June. While these retail investors are rushing to buy these stocks at record highs, what is happening on the other end is that the clever investors, primarily institutional funds, are closing their positions and selling their stocks. A recent report from Goldman Sachs showed that hedge funds have been a net seller in 6 of the past 8 weeks, resulting in a cumulative reduction in market value of about 10%. While small retail investors are rushing in to buy stocks at record highs, the big money, the smart money, is rushing out for the doors.